Greetings, astute investors. Welcome back to the Dividend Uncle. Today, we're not just scratching the surface, we're peeling back the layers of Mapletree Industrial Trust, or MIT. Brace yourselves as Mapletree Industrial Trust, with its formidable 9.2 billion Singapore dollars portfolio, unveils a tale of transformation that transcends the ordinary. How has Mapletree Industrial Trust outgrown its industrial roots? And what does that imply for investors or potential investors of Mapletree Industrial Trust? The answer resides in the hidden intricacies we're about to uncover. Before we embark on this revelation, Tiger Brokers have good news for you. Use my exclusive link in the description to sign up for a new account, and you may win up to $888 in shares. On top of that, you can get $30 Apple fractional shares, plus $30 Tesla fractional shares, if you deposit 1,500 Singapore dollars after opening your account. So if you are looking to start investing in Singapore, Hong Kong or US shares in 2024, and don't want to pay any commission at all, sign up with Tiger Brokers today. Now, let's immerse ourselves in the riveting narrative of Mapletree Industrial Trust. Mapletree Industrial Trust's evolution beyond industrial roots. Mapletree Industrial Trust's narrative began conventionally, mirroring the standard industrial REIT trajectory with flatted factories and business parks in Singapore. Humble roots? However, a profound evolution has occurred. Mapletree Industrial Trust crafted a distinct portfolio and strategy that sets it apart by expanding its horizons beyond the shores of Singapore. Mapletree Industrial Trust strategically acquired data centers in the US, Canada, and Singapore, coupled with office and high-tech buildings. This strategic move aligns with the growing demand for data centers, fueled by cloud services, artificial intelligence, 5G, and the Internet of Things. Fast forward to September 2023, and Mapletree Industrial Trust's portfolio underwent a radical metamorphosis. Data centers constitute a significant 56% of Mapletree Industrial Trust's portfolio value, followed by high-tech buildings, 16%, business parks, 6%, flatted factories, 16%, and stack-up/ramp-up buildings, 6%. The data center versus industrial dilemma. Why is this crucial? Because Mapletree Industrial Trust has transcended the realm of an industrial REIT. Data centers, the silent architects of our digital era, now dominate its portfolio. I know, the property specialists are going to start scolding me that data centers are actually classified as part of industrial properties. But there is a captivating reason for differentiating data centers and other industrial properties. The dynamics of data centers stand in stark contrast to the conventional industrial properties. Let me explain. Data centers are not really what investors would think of immediately when we talk about industrial properties, and for good reasons. Data centers are specialized facilities that house servers and other IT equipment for cloud computing, data storage, and network connectivity. They require high levels of power, cooling, security, and redundancy to ensure uninterrupted operation and optimal performance. In addition, data centers are also subject to different demand and supply dynamics, as well as regulatory and environmental factors, than other industrial properties. For example, data centers are driven by the exponential growth of data generation and consumption, especially from the adoption of cloud services, artificial intelligence, 5G, and the Internet of Things. According to McKinsey, the demand for data centers in the U.S. market alone is expected to reach 35 gigawatts, GW, by 2030, up from 17 gigawatts in 2022. The U.S. accounts for roughly 40% of the global market, which Mapletree Industrial Trust is focusing in. On the other hand, other industrial properties are influenced by the cyclical trends of the manufacturing and trade sectors, as well as the structural shifts of the global supply chain. These sectors are more vulnerable to external shocks, such as the COVID-19 pandemic, the US-China trade war, and the semiconductor shortage. Differentiating Mapletree Industrial Trust in the REIT landscape. Mapletree Industrial Trust's portfolio now echoes that of a data center specialist. It is closer to Keppel DC REIT, which is 100% focused on data centers, than Capital and Ascendus Trust, which has a more diversified portfolio of industrial, logistics, business park, and office properties. Mapletree Industrial Trust maneuvers within the distinctive universe of data centers, marking its distinctive presence in the REIT landscape. But what does this mean for investors? 1. Veiled growth potential. Beyond the surface, Mapletree Industrial Trust may harbor higher growth potential and resilience, riding on the robust demand and stability of the data center market. Many of the leases are very long-term, and triple net lease structures that provide income visibility and certainty. 2. Valuation beyond conventions. Mapletree Industrial Trust might not be playing by the usual rules, potentially commanding a valuation premium than other industrial REITs, due to its avant-garde, future-proof portfolio. 3. Navigating uncharted risks. However, Mapletree Industrial Trust faces risks unfamiliar to traditional industrial REITs, including power availability, competition from cloud vendors, and a nuanced consideration of environmental impacts. The Dividend Uncle's take. Now, you might be wondering whether I am positive about Mapletree Industrial Trust and its unique path. Well, it boils down to Mapletree Industrial Trust's forward-thinking strategy, and the support of its sponsor. I like Mapletree Industrial Trust because it doesn't aspire to be the next Capitaland Ascendis Trust, the largest industrial REIT in Singapore. Its higher exposure to data centers positions it in a realm of higher growth potential and resilience, reflecting the evolving demands of our tech-driven world, and well-thought-through strategic planning. Mapletree Industrial Trust's focus on data centers taps into a dynamic market with long-term income visibility. In addition, its diversification with industrial properties can provide a stable base to expand further into data centers. However, different investors may prefer more conventional industrial REITs. Mapletree Industrial Trust may appeal to those seeking higher growth and resilience, even with a willingness to accept higher risks and volatility. Meanwhile, Capitaland Ascendis Trust may attract investors desiring stability and diversification, albeit with lower growth and upside potential. So my dear investors, dig deep to find which do you really prefer. In conclusion, Mapletree Industrial Trust has transcended the boundaries of a traditional industrial REIT, emerging as a hybrid powerhouse with data centers at its core. Investors, heed this paradigm shift. It could be the catalyst for unlocking a new dimension of returns and mitigated risks. So, if you're ready to embark on this expedition of enlightenment, hit that like button, share with your investment comrades, and stay tuned for more riveting insights. Until next time, may your investments thrive.